I would highly recommend that anybody in our industry, I don't care what level you're at, you need a coach and you need a mentor. That's what we really need. And we've got to find ways to train our folks on site, our regionals that are leading multi-site portfolios, and our VPs even. We really got to lean in and focus on that. The volume of data that we have, it's overwhelming. And I think we're paralyzing people with it. But I also think we're not sharing with our clients enough. I know that most of the third-party operators have all this data at their fingertips, but I don't believe that it's getting trickled down to help clients make decisions.
Hey, this is Reid, CEO and co-founder at Digible. And today on another session of Riffing with Reid and Digible Dudes. So maybe there's a hyphen there right now. David is actively running, and I say I don't know if in this moment, but he's running up Mount Fuji in Japan. So unfortunately, he's going to miss this one, but I have a feeling he would really enjoy this conversation because for us, this probably isn't the standard guest, so multifamily marketer, owner, operator, but certainly influencing all of those worlds, which is Leslie Mathis. And so just really excited to have her on the show today to talk about asset management, this consulting firm she has, and some of the insights that she's been offering, and probably also some of the things that she might be forecasting, not to jump ahead, but as it relates to operations and asset management, what really driving value at all. I'll say at all because there's probably a lot more that we'll get into that I'm not even aware of. But Leslie, very welcome to the show. And if you don't mind, give us a little bit about your background.
Well, Reid, thank you so much for having me. I'm Leslie Mathis, like you said, and I'm the owner of Streamline Multifamily Group. I founded Streamline 10 years ago. We just celebrated our 10-year anniversary, which is exciting. But for probably the last 3 years, we've really been in a growth mode. I left property management from the management side 10 years ago, but I spent most of my career as a regional. But my story is pretty interesting. I fell into the industry like most people, and I actually started as a housekeeper and worked my way up. So in my early 20s, I basically ran away from home to Charlotte, North Carolina. And I was looking for an apartment, and I had this dream that I was going to live on Lake Norman. But I couldn't lease an apartment because I didn't have a job. So the first community I went to, the manager toured me for whatever reason that day, and she said, "Hey, if you want a job," I fired my housekeeper on Friday, and this was a Monday. She was like, "You can start tomorrow." And I was like, "Okay, great, thanks." And I ended up calling her back later that day to say, "I need a place to live and a job." And she said, "Well, you can start tomorrow morning at 10 a.m. I worked for that company for 8 years. I never filled out an application or took a drug test, which is still kind of funny. But within a couple of days, I was in the office because I'm still not a good cleaner, and that wasn't a good fit for me. But I worked my way up from a very entry level position. And like I said, I spent most of my career as a regional before I started Streamline. And then, but now I've been on the ownership asset management side for the last 10 years, which is a really fun place to be too.
Well, let's pick it up there. As hard as it is to resist, unpacking or hearing a little bit more, I'll say just stories of your time, on the housekeeping side of things. I mean, I'm already feeling inspired though, and curious at the same time. Just what a journey you've traveled. What, as you mentioned, is air quotes fun. And I respect that because I think once we really find our craft and where our jam is, it should be fun. But what specifically lights you up, I guess, gives you flow, if you know the expression, I guess, or idea of flow state, as it relates to property operations, asset management, helping drive value, for multifamily. And forgive me if I don't remember if I caught that for you it's beyond multifamily, or is there a specific niche, within real estate that you usually are focused on?
Only multifamily. So that's my world. That's what I've done for the last 25 years. So that's the lane I stay in.
Cool. So yeah, what about it? Gives you, that flow, that energy, and I don't want to even lead you. So yeah, what where does the joy and the passion come from in doing what you do?
Yeah, I've done this for 25 years and I can't imagine doing something different. Like, I always say there's not another girl that loves apartments more than I do, but I would tell you, I mean, that's ebbed and flowed over the last 25 years. And, one of the great things is there's always something different to do. And I think that like early on in my career, that's what I loved so much is I might not have wanted to work on financials today. And so I would go clean the pool or I planted flowers, or I've had a lot of mishaps on the operations side too with paint, and we can save that story for another day. But today, what really excites me is really driving value for our clients. And so at Streamline, we're really the conduit between the owner and the third party management company. And while this is fun most days, like it's our job to provide value. We work with a lot of developers mostly, and I mean, they don't do it for fun, they do it to make money. And my years of experience on the operations side really brings a different view to the table for the ownership group. And again, everything that I do and I love, from branding and creating the experience to design and delivery and opening lease ups, is really all to create value. But my true love is conception to opening. And so now I'm starting to spend a lot more time doing that. I love designing apartment communities, working with a developer from, the minute they find the dirt, doing the underwriting. I still love financials and I love budgets. I was actually reviewing a budget for a client right before we hopped on this. And I was like, if I could get through this reforecast before we jump into a podcast, that'd be really great. Um,
Reforecast. I love it. I know that word too well.
but it's kind of it's the, what some would say is the glamorous part, because everybody on the operations side and most on the asset management side love the design part. But I don't do it from a perspective of picking out pretty tile and great light fixtures, but it's all from taking my operational experience, identifying the demographic and what really works for that project. How do we design different and better than everybody else? How do we create that experience for the prospect, for the resident, and for the team too? And it's not just like what's fun and pretty, but what gets us the highest rents and what is going to be the most impactful for reducing turnover. And so it's really from an operational lens, but it's the piece I love, and bringing it to life and the branding portion. That's what I love. And now I'm just going to put it in the universe. What I have the high rise bug. So I've been working on some pretty amazing high rises lately. And so now I want to work on the taller the better, the swankier the better. Like I really want to work on more high rise.
Amid the broad spectrum, I suppose, as you mentioned, operations and all the things, it sounds like you contribute value towards, or offer counsel advice. Um, what what's changed the most, I suppose, as far as the conversations you're having now versus what you were having a few years ago?
It's changed a lot. Like the world we navigate today it's a lot harder. And I think we're all hopeful we're about to turn the corner. Like it's going to be easier, right? It's going to get easier. And I don't know if we're there yet. A few years ago, I called it puppies and pancakes. I mean, people were coming in offering our leasing teams puppies just to get that 3 bedroom. And like, even I worked on a deal in Charleston, and before kind of that highest of the high, we were leasing 3 bedrooms on a really nice deal on Clements Ferry, for like $1,700, and we couldn't give away the 3 bedroom. Like it was tough. And then at the peak, it just, I mean, those 3 bedrooms were going for $3,600. And I mean, they would lease as soon as they would come available. People were stalking your website trying to see if somebody put in a notice so they could get in on that unit. And that's not the world we live in today. I mean, it's been a lot more challenging to hit the rents that we've underwritten. I mean, some of these deals that have delivered today or in the last year, rents were underwritten at prices that like really weren't proven out because occupancy was so high. And, if you were to review somebody's website, those were rents that just hadn't necessarily been achieved because there was no availability, and deals got underwritten that way. And there's no way for us to hit those rents in some markets. And so life is really tough. And I mean, I think that's been the biggest shift. Like, we need operators today more than ever to navigate some of these downturns and the softness in markets. And some of our people that are operating these deals today, they don't have the experience. Like, they grew up in the industry during puppies and pancakes. And I fell into the industry in 2001. And by the end of 2001 in Charlotte, there were signs up that said, 3 months free, 6 months free. And then it happened again in 2008. So I've navigated some storms that, a lot of our folks haven't. And I don't know that we've turned the corner. And so we really have to get back to being operators and trying to be solution driven to fill these gaps that we're seeing in these markets.
So, what are some of the suggestions then, if we're in an environment climate now that it requires a more adept, operator to navigate? And I know that this is highly dependent on the asset, so I'll just leave it there. But like big qualifier. But I'm just curious to hear what are some of your suggestions right now to help these operators or those that don't have the background, as you said, to navigate a more turbulent, I guess, climate, more headwinds.
So some of us old school folks have to start mentoring and coaching these newer professionals in our industry. I would highly recommend that anybody in our industry, I don't care what level you're at, you need a coach and you need a mentor. That's what we really need. And we've got to find ways to train our folks on site, our regionals that are leading multi-site portfolios, and our VPs even. We really got to lean in and focus on that. And then I would say, like, if we could solve that gap on training, which it's a pretty wide gap if we're being honest with ourselves, but if we could at least close that a little bit, we really need to think through, like, not everything can be about price and concession. If it is, then we're just chasing to the bottom, and we don't want to be the race to the bottom. So what can we do to differentiate that asset? I was working on a deal today for Charlotte, and I mean, Charlotte's a competitive market. And this deal is, maybe some would say it's not the best location, but what can we do to differentiate ourselves? Like, we're trying to comp to a higher end submarket and a higher end deal that's achieving rents that we want to achieve. Well, we can't chase them. We can't be their neighborhood because that's not who we are. But what can we do to differentiate ourselves? And because, again, it can't always be about price and concession. There's things that we can do, and we've got to hit the basics. But for this deal, I mean, we're really going to tap in and do some neighborhood programs, offer some PEP discounts for teachers. We're going to do backpacks at Christmas time. But I mean, it's the right thing to do, but I mean, it is self-serving too. Like, we want leases from it. Like, we want to do the right thing, but we want leases. But if we can craft stories like that, then we know that our demographic wants to be part of a story, and they'll rally around it too. So, and just another way to differentiate ourselves. We're having a lot of conversations that do come up about price and concession, but then you dig in and our websites aren't updated. Our campaigns aren't at the right budgeted amount. I've had more of those conversations, and Digible has come up like probably 5 times today. But if we're not hitting the basics, we've got to fix that first before we even start talking about price and concession. I mean, we do have to price our units right, and we have to create value, and we have to be competitive. I understand all that. I often get beat up pretty bad because, the perception is I'm against concessions, and that's not really true. But I do want to craft a story, and I do want to put my best foot forward so that it's I don't have to race to the bottom and offer 3 months free. Like there has to be some type of compromise. But we've got to teach our teams to get back to the basics. And I even hate that phrase from a few years ago. But I mean, if we're not hitting on the fundamentals, then why should it be about price and concessions? Like we need to fix that piece of it. And it goes back to coaching and training, and people can't be our problem. Like we're a people industry, so we have to fix that.
Yeah, no doubt. Well, there's a lot there. One thing that, in a good way, that just stood out to me though, as far as the training and upskilling, on the operational side, but then the creativity you were mentioning, kind of picturing, let's roll up our sleeves, let's get in a room and think differently. Let's try to unlearn, rethink some things and how we've approached this. Otherwise, we're not going to see different results, right? So I kind of love that, where it's like, and that's more maybe some of those fundamentals are in the upskilling and training, but also trying to make sure people are still exercising, we'll say, the right side of their brain. It's like we're going to have to get creative. So I don't know if I can parlay that into a question about where the biggest disconnect lies between marketing and operations, but you took me there just mentioning how our name came up a few times. But in a few podcasts in the past, David and I had talked about the equation, I'll say, of concessions versus marketing. And that may, or I don't think that surprises you. Just in like, is it a better idea to go concession, or a better idea, and it's not this simple, but to increase your marketing budget, or shift your marketing budget? And it wasn't meant to be self-fulfilling, but when we were doing examples of this in the math, and this actually is something we looked at too during the pandemic years ago, when everybody seemed to be racing towards concessions to try and solve for what was happening, that the math just didn't pencil. And that was something that we didn't at the time understand how to surface or educate at least our universe, because we don't always have opportunities to speak directly to the owner or an asset manager. But we were clamoring to do that. We were like, look, if we can actually model some of this with you, I think you'll realize that you don't necessarily need to move to a concession there. At least give us a chance on the marketing end, and maybe improve some of your marketing operations. And that would be things like how you're fielding calls and nurturing calls, as well as the website you mentioned. There's just some low hanging fruit that probably could improve this equation. So let us get through that. We'll do it quickly, and then make a decision on whether you actually need to offer an incentive. So I'm just, maybe that was too much of a tee up, but I am trying to tee you up here. What do you see as other than, or you can unpack that even more, but some of the biggest disconnects between the marketing and operations relationship?
Oh, yeah. I mean, you're speaking my love language. So I don't know if it was 8 years ago, 10 years ago. I don't even think I knew this. I mean, I spent 5 years at Mid America, and I mean, I think they really helped me hone my operations skills. And we worked really closely with our marketing team and our regional maintenance team. Like, we really collaborated. And then I spent a little bit of time with third party until I started Streamline. And somewhere in that like time frame, I really realized that strategy is so much about marketing, and like you have to partner with them. And so I actually teach a lot of classes about like kind of my class is called Through the Eyes of an Asset Manager, and I've been doing that for about 8 years, and really teaching people what operations solution driven is really looks like, and what your ownership is looking for, whether it's in-house like owner operators, or if you work for third party, so that they understand what the ownership lens is. And so one of the things I say is, if you're not talking to your marketing team weekly, like you're missing it, you're making a mistake. And so many times, like our third party management mostly is saying, oh, well, we're going to look at these our marketing reports monthly. And that's probably a big miss too. I mean, we can't make big changes with our campaigns week over week, but we can be looking to see how it's changing, how it's shifting, and make strategies. It doesn't have to be 30 days. And so if our operation team isn't working with marketing, I mean, it's a huge miss. But if you even think about it, Reid, like if my average rent, just for easy numbers, is $2,000 and I'm giving away, and most markets aren't giving away 1 month free per move in, they're giving away 2 months. I mean, think about what impact I could make driving traffic through the door with just two leases, like two concessions, like $8,000. Like, I can make a huge impact adding that to my budget. And, there's two sides of that. Like, brokers are going to devise ownership groups that get higher rents, give a bigger concessions. We can burn it off and it's okay. Watch your expenses. We didn't used to be held accountable to our expenses. It was all about rent roll. And today we're held accountable to both sides of it. So that makes it a little tougher. But if I'm just focused on like a high end class A lease up and I have elevated marketing expenses through my lease up, I can also show that I'm probably going to, pull those expenses down once I stabilize. So there's a balance and a story there. It's always about crafting the story and looking at both sides of it. And like, where is it best to spend that money? I mean, you're going to spend it probably one way or the other, but how can I project that dollar amount? I can, if you had 20 move-ins a month at 2 months free, I mean, that's a huge concession number. Like, nobody would ever let you spend that kind of money on marketing. But it's really interesting just to, like, I think it's a miss from an operation perspective. Like, we're not asking the operators aren't asking the question to their ownership group, like, hey, what if I pulled this concession back and spent a little bit more money here? Or another one that I really like doing is I'd rather incentivize the team and pay out higher commissions than offer, higher concessions. And it's pretty interesting when you start motivating the team with money, what you can do and what they can sell with. Like, sometimes they just need somebody to believe in them and show them, like, you actually could get this rent amount. But it all goes back to, I got to drive the right traffic through the door, and I can't do that without you and your team. And if we're not having those conversations, it's a huge mess.
Yeah, no doubt. Well, I'm going to first ask, what advice would you give companies like Digible, um, as far as our role or how we could improve that? I know there's some limits, obviously, as far as our access to operations and owners and asset managers, for that matter. But I just didn't know if there's some, you know, uh, I don't want to call it easy, but quick advice you could offer for us to help with that issue, I guess, that challenge that we all know exists between marketing, operations, ownership.
Yeah, everything I keep talking about today, and I don't know why I'm on this soapbox, but it's really about education. Like, you have to continue to educate your clients on how all of this works. I mean, most of them don't understand it. Even when you think about the regionals you're dealing with, they don't understand what you do. And so they're relying on you and the marketing director to help them navigate it. But the more we can teach them, the more we can show them how to read those reports, the more that we can tell them to lean into you, the better it will get. And then I really would start opening up calls with clients. I mean, I know enough to be dangerous with digital, but I do know that I've hitched my wagon to two firms that I really trust, and you're one of them. And I know to ask the question, hey, let me get on the phone with whoever's the account manager or the director over my account. I need to talk to your person so they can hear it from me that I want to drive this specific traffic to the door. And it's pretty amazing what you can do. It's pretty amazing what the analytics that you can pull on the back end to help guide and make decisions on that campaign and the spend and the pivot that needs to happen. So it all really goes back to education, and really like talking through the numbers of, well, if you gave me this much money all the data shows that I should be able to increase your traffic by X. And so, again, it just comes down to facts over feelings and then educating your client too. And you've got to get in front of more people than just the marketing director because, like, I think to your original point of like, we can spend more money in marketing to achieve higher rents to hopefully offer less concessions, and that's what builds value. Like, we can do a lot with a little bit on the marketing side when you really put it into perspective.
Yeah, couldn't agree more. And I'm probably a little biased, but I'm still going to say that. Um, so you mentioned data, not necessarily in the way that I was going to serve it up, but I'll use it as an excuse to ask you this question. Um, for your firm right now, when data comes up, whether it comes to you or you bring it forward, I mean, obviously at some point that conversation or data will enter the conversation. Um, that's another one I'm curious. How much has that changed in the last year or two as far as the data that you think should be being evaluated, scrutinized more, or is it essentially the same data? So it's fine if it is, but there's just so much, and the more technology in conjunction with everything else that is standard with multifamily, I just feel like probably operators and some case marketers are overwhelmed by the amount of data now at their fingertips, and so they can get lost in the sauce. It's like I'm not sure what to be looking at. So I didn't know if for you it's more customized, meaning like from one property to the next we could hone in on this data set, but when I'm talking in this situation, I'm moving or focusing over here. So that's just to open it wide for you. Like, talk to me and us about the data that you're looking at, and has that changed much over the last few years?
So I probably going to open a can of worms, and it might show that I only know enough to be dangerous, but I have this school of thought and I keep proposing it or throwing it out to people, and nobody can tell me that I'm wrong, but nobody can tell me like how to fix it. And then I'll often hear that somebody's working on it, but I haven't seen a change. So I well, one, I want to address the volume of data that we have. It's overwhelming, and I think we're paralyzing people with it. And but I also think we're not sharing with our clients enough too. Like, I think I know that most of the third party operators have all this data at their fingertips, but I don't believe that it's getting trickled down to help clients make decisions. And I think some of them would disagree, but I sit on the client side for several, and I just don't see enough of it. And we're not making decisions because of it. And it's not guiding our decisions. Like, we're still hearing about feelings, but I also think that our multi-site leaders are getting fed a lot of data, but they don't know what to do with it. And it just, again, paralyzes them. But I have this theory about marketing, and when I get my marketing packages every month, they all look the same. They still look the same from like 7 years ago. And I'm like, what has changed? And why are we measuring this campaign the same way that we did 5 years ago? Because I have this theory that Google has changed, and so our KPIs should be changing. But we're still measuring the campaign the same way we used to. And I think this is why every time we get on a call with a marketing director, most clients aren't talking to you and your team directly. So it's information that's funneled through the third party management company. And we get on and everybody says, wow, this campaign is doing great. It's doing this, it's doing that. And I'm like, well, but nobody's walking through my door. So something is disconnected, but nobody, like, nothing's changing. So again, every call you get on for monthly marketing is, wow, everything's going great. But on the operations side, you're like, well, but I don't have any leases and I'm spending this much money and something is not working. So I think we're measuring campaigns incorrectly but I don't know the answer because I'm an operator. But I really believe that that's part of our problem today. But it might just go back to everybody's drowning in data and they don't know what to do with it. And again, I still think that things have changed from the digital side, but we're not measuring to the change.
Yeah, I think that's really insightful, especially from somebody that's more coming from operations, but you definitely know enough to be dangerous in some of the things that you're saying. And a lot has changed with Google, and we're kind of a Google forward shop, I suppose. I mean, we're pretty deep in a lot of different platforms and, ad tech, martech. But I think almost a data point in itself could be the delta. I don't know exactly how you would uh, create that, but between the anecdotal, if you will, and maybe it's not just anecdotal, but what the on-site team's experiencing versus what they're hearing from their marketing director or an agency, because that gap unfortunately exists, pretty frequently. But sometimes it's smaller, and obviously that's what you're shooting for. And then there's other times, you have the example of what you just described, where the agency or the marketers kind of beating their chest, feeling great, and then they get on the call and it's like, I've got nobody coming through my door. So that delta is almost, it could be a new metric, right? But that's what we really want to condense down. But I'm going to move us, and you said you didn't say it was triggering per se, but you don't love going back to the basics like that phrase or mantra from a few years ago. I have the same aversion to AI right now. So it's hard for me almost, even though I know so many people are rightfully interested, to bring up AI, on a regular basis on this podcast. But um, I try to acknowledge and get past my own aversion or allergy to it, and I'm actually super fascinated by it. I just it's the cliche ish nature of it that is what's gotten to me. So that's my public qualifier. But when we talk about data and the lack of understanding, um, and the amount of data that you mentioned that can be paralyzing, are you expecting, and you may not have yet yourself seen this or experienced it, but that this could be one of the more valuable, not kind of bells and whistles like smoke and mirrors, if you will, but one of the truly more valuable benefits that AI could bring to this industry, which would be bringing incredible analysis at an affordable rate to every asset, where you could upload, we'll just use this, make this simple, but these swaths, of data and, all that volume, and it's able to analyze, make sense of it, and then translate it in plain English, so that as a firm like yours, or for those that are directly tied to the asset, that they could with confidence be making far more informed decisions than they are today. So that's a setup. A, do you agree? Have you seen that? Are you expecting that, like, in what AI could create as far as like transformational improvement to the industry? And then any other comments, in that same vein of what has you excited about AI for multifamily?
Yeah, I mean, I probably fall into a similar camp as you, and I think it's almost a double-edged sword, but I think it's one that we're going to have to embrace and learn to use for good. And I think there's a lot of people out there not using it for good and what it's meant to do. But yeah, like if it can make us more efficient, then and the more we do it, the more it learns, and then we get better information from it. Yes, especially if it means that the information is going to make it from one source to the next, meaning like from the management company to the client, and or like even from your firm to the client, so that we can make educated decisions on operations and all in a solution driven way. I think it's really unfortunate. This is like my other soapbox right now is like we're not using it for the way that it's intended. Like if I get one more email with an emoji on it, that is all these check marks, and like, because you couldn't write the email yourself, then it makes me crazy. Like, I just delete those. Like, if you want to, like, if you want my time, then you'll put some effort into making it look like it didn't go through chat GPT. So that's my thing. But if we really could use it, and I know there are companies doing this, but like taking it and making it, I saw somebody, I think it was Dana Pate actually, that like really posted this LinkedIn post about like, if you're not using AI, you're going to get left behind. And the way she said it was just so genius. It really is like learning to take it and make you more efficient and produce at a higher level. And if that's what we could do with reporting for your example, then it'd be great. I even think too, um, like, why aren't our teams utilizing it in a better way for follow up or communication, or like to be impactful, to set themselves apart? Like, I still see follow up that is being generated that is one sentence. It doesn't even make sense. Like, in they have so many tools at their fingertips. Like, why aren't we utilizing it? But somebody really is going to have to get in there and really make some best practices so that we utilize it in the way that it was intended.
Yeah, yeah, 100%. I've been saying more recently, for what it's worth, that companies need to start thinking more about AI enablement. Um, and because you can get swept up in some of the, I guess, examples or wizardry or whatever you want to call it, voodoo of AI, and like, again, as you said, kind of for often for better or worse, um, and breeze by or completely overlook what needs to be done if you really want meaningful gains. I'm going to use transactional versus transformational, but so much of what we're seeing today from AI, I think, is transactional. It's like this small thing over here. And it's not to say that you should totally discount or dismiss that, but I think what owners and operators should be looking for more now from AI is transformational change. And it's hard to expect or get there if your company is not AI enabled. And so that is your infrastructure, it's your data. And there's, as you talked about, upskilling and training. I mean, there's a certain level of that that needs to be done across the board. And then your prime, I believe, and we're ourselves going through this, to really capitalize both on the value capture of AI, which I would segment, or define as more like the efficiency gains that everybody seems to see and is kind of chasing, but also the value creation side of AI, which that those are the things like we never thought this was possible. We never thought we could do that. And now that we're AI enabled and better understanding this technology, we're seeing things that could exponentially improve the value, to our residents. So yeah, it's I'll get off my soapbox now, but I just that's how kind of we're talking about it and thinking about it recently here at Digible. Um, I wanted to ask you about differentiators, as you were talking about, where your flow state is and the energy you're getting from some of the taller, swankier, Class A's. But it seems to me, and it's been this way, I'm sure, for a long time, but it's just one of the absolute hardest things to establish in multifamily. Even if you're the new shiny object, asset that has, we actually had a company or an asset that we were marketing that had a new cryogenic chamber in its lobby. So, those, maybe that is an easier thing to call out as a differentiator. But what I'm getting at, Leslie, is like when you look at Class A websites, many of them kind of blur together or blend together. They have often the same anatomy, like as far as neighborhood content, floor plans, and I don't fault. Like, I understand this. And then when you are touring a building, you go in and it's like, check out our pool, check out our business community, center, blah, blah, blah. I won't spell it out. I know you know where I'm going. And many of them often are in similar locations, similar prices. So I have no answer for this, but we are tasked with it. And it's interesting when we work with a lot of our clients, they actually don't jump into this as soon as, if ever, with us. where we really spend time on differentiators. And I've just started to wonder, is that because there's really not huge differentiators? And I'm guessing I'm striking a chord with you, or you're going to have a meaningful response to that. But for somebody that's consulting, especially in the space that you are, how do you talk through that as given how crowded and competitive it is in multifamily with Class A assets?
Yeah, if you don't believe in that, then I'm probably not a good fit for you. And if you're not remotely open to it, then I'm definitely not a good fit for you, because at the end of the day, like it's somebody's home, but and which makes it very unique and special, and it makes our life harder, because it's so personal. But if you don't think that creating the experience and differentiating from your competitor drives value and grows a rent roll, then I'm just not going to be a good fit. And it can't be about checking the box. At the end of the day, Reid, I mean, it's always going to be about people. We've got to put the right people on the asset. And we can all have a pool, and we can all have branded water and fitness centers, and we're always trying to find the next big thing. But what is the next big thing? Like a cryo chamber in your lobby, that's pretty impressive. I don't even know what the liability of that is, but we'll save that for another day. But I mean, it really is about the people. Like, how many times do you go into a $160 million deal and nobody even stands up to greet you? Like, that's where we can add a lot of value for people. But you have to be different. You have to stand out. Like, sometimes I look at websites and I'm like, did you even read the copy on the website? Like, it doesn't even make sense. It sounds like every other person. And so we've got to get into those details, and those are things that drive value. Um, and people aren't thinking about that. Like, if even on a conservative number, our prospects are looking at five different competitors, and they're going to go to five different websites, and they need to make sure that your template's not the same as your competitors. Like, most of us are using templates today. Like, we went down this long path of custom websites, and now we're back to templates, and I'm guilty of that too. But you need to make sure that it looks different, and that the copy makes sense, and that the front door is clean. And but I don't know how we get people to buy into it, because it's almost like that's the most broken piece of our industry. But it all comes down to people. Like, again, I went on a website today and their special hadn't even been updated. I'm like, why? But if people don't care, then you're going to find all of those things. But then I think you actually asked, like, how do we get the client to believe in it? And all I can say is we have to keep doing it so that they can see the value and the high water marks on these sales and things like that. It was easy to say in the peak of the last cycle that, oh, well, it wouldn't have mattered, this deal would have broke records. But today, that's not the story. So we have to work harder to build the value, and we're probably getting people to come along for this ride now. But if we don't train the on-site team to do it, then it won't matter how great that we built this brand out to be, and the story that we crafted, and that the scent makes, ties back to the brand, and the career apparel does too, and our campaign lives it all out, and social media is cohesive with the rest of the story. Like, we'll never get them to buy into all of that.
Yeah, no doubt. Well, I can already tell that I'm going to want a round two with you, maybe a round three. So I hope you're prepared to be a recurring guest.
I'm
But
in.
all right, well, excellent, because you're a fountain of information. I think we're just scratching the surface, obviously. But I wanted to wrap up this conversation with what's now, I feel like, becoming a signature question, uh, because I never know what I'm going to hear. And so I'll put it to you this way. Speaking of value creation, which is a big part of what you bring to the table to your clients, when it comes to value creation for multifamily Class A, I'm going to try and be as specific as I can, assets slash apartments, what do you feel is the most overrated element, component of that you I don't want to say roll your eyes, but wish people would kind of move on or understand that is not, in fact, where you're going to generate the most value, and where's the most underrated. So, most over and underrated as it relates to value creation for Class A multifamily assets.
So, oh, I might take a beating for this one. And it's going to sound like I'm speaking out of both sides of my mouth when I say this, but I think the most overrated right now is smart home technology. And when I say that, I mean like in the unit, smart switches, smart plugs. I mean, we've all been sold this dream about leak protection and the benefit to our insurance premiums, and that is not proven out. Um, I just think that that's a hard sale that really it's very expensive with a minimal premium. And most of those things the resident could add themselves. And, but in the same vein, I think the piece that a lot of new projects get really wrong is access control. We have to make that user friendly, from letting your dog walker in to your cleaning person to getting into the entry gate to the elevator to guest control, delivery services. Like we spend probably too much time on the devices and not enough time on the access control. And but if we got that right, like I am telling you, people don't mind paying IT fees, amenity fees. Like we want to get into the fee debate, but they don't mind paying for that. And there's also this level of expectation that it has to be easy and user friendly for sure. But it access control is like the hardest on new development, and it's one of the biggest misses, but it's so important.
I love it. I absolutely love it. And like I said, I wasn't expecting, but I'm not completely shocked because I've heard that perspective not every day, but occasionally, just about the smart technology and whether that is in fact overrated. And I think it's interesting, as you said, you don't get much of a premium out of that. So I've wondered, has it just become table stakes, and it's less about is it going to create a lot of value, and it's more like I can't afford not to have that because it's become an expectation, at least at that level of asset. Um, so this is really tough because I really do want to go another hour at least. But yeah, I'm excited to have a round two, and just really grateful both for your patience up front and just a really rich conversation in a relatively short amount of time for me at least. And yeah, look forward to us getting to talk more about all things operations, and kudos to you because yeah, you definitely have a good handle on marketing, and it's not always what we get when we talk to operators.
Well, Reid, thank you so much for having me. This has been so fun, and I would love to come back again.